If you own Tesla stock, you most likely make long-term investments with your money. When it comes to retirement and long-term investments, one thing to keep in mind is that you want to have enough money to live comfortably for as long as possible. Buying stock may be an excellent way to do this. Therefore, if you have decided to invest in Tesla stock for this reason, you ought to be aware of the exact amount of Tesla stock you will want in your portfolio in order to live well in retirement in 2030. The CEO of the Future Fund and a powerful Tesla bull, Gary Black, has revealed how owning Tesla shares can help you live comfortably in retirement. 3 fundamental metrics are used to calculate Gary Black's Tesla stock prediction: Tesla's share value, global EV adoption in 2022, and Tesla's rate of EV deliveries. According to Black, by 2030, Tesla's market value will reach a staggering $4 trillion. By 2030, he predicts the electric vehicle sector will have 60% of the market, and Tesla will hold 21% of the auto market. Several investors, including Gary Black, anticipate that Tesla's market capitalization will surpass $4 trillion by March 2020. Additionally, Cathie Wood estimated that there was a greater than 25% possibility that Tesla would have a valuation of more than $4 trillion by 2025. In the past, Tesla bull and her company, ARK Investment, have projected that the company's market capitalization will reach $4 trillion in the best-case scenario, and that the stock price will rise to $3,000 by 2025. One of Tesla's worst years ever, 2022, saw a more than 75% decline in the company's market price. It performed poorly as well. The largest cryptocurrency in the world, Bitcoin, has, nevertheless, made an incredible comeback since its January low of 102. Since then, the stock has recovered more than 170% of its initial loss. The positive Tesla quarterly financials, which reveal a notable rise in the company's sales and revenue, are thought to be responsible for the current price increase. The crucial query at hand is whether Tesla stock is a wise retirement investment. Yes, for a number of reasons, is the succinct response. Before we get started, please make sure you hit the like button, subscribe to our channel, and enable notifications if you enjoy this kind of content so you can be informed about all the latest news on Tesla. Although Tesla is a very contentious business, ardent supporters like Cathie Wood and Gary Black think the company will succeed in the long run. In addition to testing cutting-edge goods, Tesla is concentrated on attaining sustainable energy. Not only does Tesla produce goods for the here and now, but also for the future. Its trucks, automobiles, batteries, and solar panels are built for the day when the world switches to clean energy, which is probably not too far off. Adding Tesla stock to your portfolio could be the best investment choice you've ever made because of these aspects that have made it a strong investment for the future. To retire by 2030, how much Tesla stock will you need to own? Continue to watch to find out. According to Gary Black's prediction, the shares of Tesla might be valued at roughly $269 by 2030. But this simply takes into account Tesla's revenue from cars. As a result, by adding money from Tesla's FSD software, which is already valued at roughly $15,000, robots and slash or robotaxis may be considered. By 2030, Tesla's stock should be valued at about $1,300. Based on the current price of $174 for Tesla stock at the time of this video, you can profit 8 times over on your first investment in Tesla stock. However, Tesla's EV delivery rate is one important component to take into account in order to attain this pricing in 2030. Black estimated that by the end of the decade, Tesla would be producing roughly 10 million vehicles annually, with worldwide light vehicle sales estimated at 85 million units. According to Black, sales of Tesla's present fleet will bring in about $140 billion for the corporation. By 2030, Tesla intends to produce 20 million electrified cars annually. The automaker also intends to build new plants for automobiles and battery cells in addition to increasing annual production at its current facilities. Tesla has added a 6th gigafactory in Mexico to its existing ones in Nevada, Texas, New York, Shanghai, and Berlin. The announcement was made via Twitter. Tesla revealed in January that it was investing $3.6 billion on its first gigafactory in Nevada, just before its Q4 earnings call. An additional 4 million square feet of manufacturing area will be added to this plant so that Tesla Semi can produce 4680 cells. Tesla is concentrating on growing its market shares and increasing output across all of its factories. The carmaker intended to do this by lowering the price of its vehicles at the most recent Investor Day. When asked how it could increase its market share in China, Tesla said, Musk added that even slight price changes can have a significant impact on demand, arguing that affordability, not desire, determines demand. Tom Zhu, the chief executive of Tesla in China, also stated that one should not worry about demand as long as they provide a product that is valuable and priced reasonably. Tesla works hard to reduce expenses and provide value to its clients while focusing on increasing operational effectiveness. Zhu stated that the company built the first million in 12 years and the second million in roughly 18 months. Building the fourth million EVs took less than 7 months, compared to 11 months for the third million. In the upcoming years, it is also anticipated that the adoption rate would increase dramatically. Out of the 80 million cars that are made worldwide each year, just approximately 5% are electric. By 2030, analysts believe that the popularity of electric vehicles will increase. According to Gary Black, Tesla, the industry leader now holding a 21% market share, will consolidate its position with 60% penetration. As sales of light electric vehicles reach 85 million units annually worldwide, including 10 million delivered by Tesla, the company's manufacturing and delivery will soar. According to the Tesla Bull, advancements in battery technologies would cause Tesla's operating margin, which stood at 14.1% in 2021, to soar to 26.1% by 2030. Specifically, he mentioned that the carmaker's adjusted profits per share, or EPS, would increase from 6.79% in 2021 to 100% in less than a decade. To stay on schedule and accomplish net zero CO2 in 2050, the percentage of electric vehicle sales must reach over 60% by 2030. According to the estimate, by 2030, the number of electric cars on the road would reach about 350 million worldwide. It is stated that widespread adoption of electric vehicles will require regulatory support that advances the installation of chargers in homes, businesses, and workplaces. Similarly, the deployment of charging infrastructure, especially in densely populated urban areas, will be driven by city codes and local policies. Future growth will depend on efforts to diversify battery manufacturing and critical mineral supplies to reduce the risks of supply bottlenecks and higher prices. It is projected that over 89% of EV charging stations worldwide will be private, situated in areas with the easiest access, like residences or office buildings. It is commonly known that Tesla has the world's largest network of supercharging stations. At the Tesla Investor Day, the carmaker made some subtle references to upcoming changes to this service. With the official launch of an updated charging station lineup, Tesla has made it possible for non-Tesla vehicles to use certain of its superchargers in the U.S. Again, Tesla will be able to take advantage of federal subsidies and quicken the shift to electric vehicles. In a similar vein, the automaker said that it will launch a 30-day unlimited home charging plan for Tesla Electric in Texas in July. This move is motivated by the state's significant overnight wind energy generation, which allows Tesla to serve its customers more affordably and sustainably by shifting more of their charging to the evening hours. Tesla has already added 646 new superchargers by 2030, putting the manufacturer well on its path to being a top charger company. According to the IEA study on producing EVs, charge points at 146 stations came in closest second. Urban planners, building developers, and electrical equipment suppliers need to incorporate charging infrastructure into conventional building design plans in order to make it more economical and accessible. EVs has many advantages, including lowering greenhouse gas emissions and decreasing reliance on fossil fuel-based energy sources. Along with their supercharging network, they also have a major impact on helping the shift to more sustainable energy systems. Additionally, Tesla has created unmatched competitive advantages, which will only grow as a result of its upcoming announcement of a more affordable, completely redesigned version of the EVs. Its batteries and fully functional self-driving software are further factors. In order to retire by 2030, how many Tesla shares are required? Please share your thoughts with us in the comments below, and don't forget to share your Tesla valuation. Click the next video that appears on your screen to find out what Tesla has been up to these past several days. There, we'll see you.